The British pound, why is it crashing? UK is in a financial crisis and the pound is crashing. The pound has hit a record low against the dollar after the sweeping tax cuts were announced. But why is the pound falling and what does it mean for the rest of the world? Also, what does a weak pound mean for your money? Let's break it down in today's video. Hello, and welcome to our channel. In today's video, we're going to look at the key reasons why UK pound is crashing and what are its implications on the UK economy. Make sure to stick around till the end of this video, where we will explain what steps you can take to prevent monetary losses in these turbulent times. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. So without wasting any time, let's dive right into the video. What is a currency crisis? When the value of the pound begins to fall precipitously against other currencies. A rapid and sharp decline in the value of the pound creates uncertainty and disrupts the plans of UK businesses that import and export goods. They anticipated paying a certain amount for imports and receiving a certain amount for exports. Everything changes as the currency declines. If the value of the pound falls, the cost of importing products from abroad increases. What does it mean for the UK and consumers? A weakened pound increases the price of imported goods and services into the United Kingdom. This will result in price increases for British consumers who purchase international items and a diminished purchasing power while traveling to countries that utilize the US dollar. Oil is one of the most important imports for the United Kingdom, and it is valued in dollars on international commodity markets. A weak pound will increase the price of fuel and gasoline at the pump. Similarly, gas is priced in dollars. Additionally, the United Kingdom imports more than 50% of its food, increasing the price of everything from courgettes to bananas. There will also be pressure on retailers of electronic items, such as iPhones, to increase their retail prices. The headline rate of consumer price inflation, which recently declined to 9.9%, would begin to rise once more. How does a weak pound affect me? Everyone is affected by the value of the pound, from consumers to business owners to investors. This is because when the value of the pound decreases, the price of imported items increases. For instance, gas prices are heavily influenced by the dollar. Petrol, oil is priced in dollars. Thus, a weak pound can increase the cost of refueling your vehicle. Food prices. The United Kingdom imports 46% of its food consumption. Foreign-made technology, such as mobile phones or automobiles, could become more expensive. Even British-made items can be more expensive if their components are imported from outside. And the value of the pound has an effect on international travel. If it purchases less of the local currency, prices will increase. According to Samuel Toombs of the research firm Pantheon Economics, the dropping value of the pound might raise the cost of living by 0.5 percentage points next year. Why is it happening? International investors appear to have panicked in response to the UK government's intention to enact massive tax cuts, which will be financed by increased government borrowing. It is anticipated that households will spend the additional funds they receive as a result of the tax cuts, so raising the demand for goods and services and driving up inflation. The promise made by Kwasi Kwarteng over the weekend to slash taxes more in the new year has only increased fears of a resurgence of inflation. Investors are particularly anxious about the government's plan to pay for tax cuts with a massive increase in borrowing. The majority of economists feel that tax cuts do not pay for themselves, resulting in more long-term debt for the United Kingdom. Part of the weakness of the pound is due to the strength of the dollar, which has been growing as the Federal Reserve rapidly raises interest rates. However, the decline in the value of the pound has intensified since the Chancellor's mini-budget. The value of the pound relative to the dollar has declined for the majority of this year. Multiple causes, including surging energy prices and the war in Ukraine, have caused the UK's inflation rate to skyrocket in 2022, heightening concerns that the nation's economy may enter a recession. In recent days, there have also been significant fears that the tax cuts and public expenditure increases promised by the newly formed Conservative government under former Prime Minister Elizabeth Truss could intensify price pressures. This has had the effect of making the markets highly tense. The value of the pound is generally viewed as an indicator of the future for the UK economy, with the steep falls in sterling since the Chancellor revealed his tax-cutting mini-budget on Friday, demonstrating how alarmed the markets are by the government's budgetary plan. In contrast, and although experiencing comparable economic difficulties and inflationary challenges, the US dollar remains comparatively appealing due to its status as the world's largest reserve currency. This indicates that it is the primary currency governments hold in order to withstand economic shocks, pay for imports, and service debts. As the world's reserve currency, the dollar is also viewed as a safe haven in times of economic uncertainty. This year, the dollar has been strong across the board, reaching parity with the euro in the past several months. Against the pound, it has likewise strengthened progressively over the course of 2022, but the pace has accelerated in the days following the government's latest mini-budget. In response to the currency market's apparent lack of confidence in quasi-coordinating initiatives to improve growth prospects, the pound has declined. In the meantime, the Federal Reserve of the United States has raised interest rates faster than the majority of its foreign rivals, producing a strong demand for the dollar. A short time ago, parity between the pound and the dollar was inconceivable, but it now appears imminent. As the world's reserve currency, the dollar is also viewed as a safe haven in times of economic uncertainty. This year, the dollar has been strong across the board, reaching parity with the euro in the past several months. Against the pound, it has likewise strengthened progressively over the course of 2022, but the pace has accelerated in the days following the government's latest mini-budget. In response to the currency market's apparent lack of confidence in quasi-coordinating initiatives to improve growth prospects, the pound has declined. In the meantime, the Federal Reserve of the United States has raised interest rates faster than the majority of its foreign rivals, producing a strong demand for the dollar. A short time ago, parity between the pound and the dollar was inconceivable, but it now appears imminent. Possible responses include emergency interest rate increases and currency interventions. The outlook for GBP remains bearish, but expect further extreme volatility. Massive tax cuts financed by increased debt. In brief, it entails reducing taxes on corporations and the wealthy in an effort to increase investment and money in the economy. To finance these tax cuts, the government will need to incur substantial additional debt. According to the Resolution Foundation, an additional £400 billion in borrowing is required over the next 5 years to fulfill these growth aspirations. This is far beyond what the markets had anticipated. As the nation borrows to fund the energy problem, there are already concerns about borrowing costs. This resulted in a major sell-off of British gilts, government bonds. In the past 6 weeks, sovereign debt has been sold off in all major economies. However, the increase in 10-year bond yields in the United Kingdom has significantly outpaced increases elsewhere. Investors are quickly abandoning UK investments. However, it is intriguing to see that this move has reversed its early morning flash fall. Is this the surrender? Catching a falling knife is a highly risky method of playing the financial markets. However, capitulation periods rarely conclude peacefully. There is frequently an aggressive decline followed by an equally aggressive comeback. It is possible that the Bank of England's action this time could result in another rebound. If the market is that overbought, a technical rally might easily take place. However, GBP remains incredibly weak for the time being, and parity cannot be ruled out in the next days. So, what are your thoughts about the pound crashing recently? Tell us in the comments. Also, if you like this video, then make sure to watch this next video on our channel. Thanks for watching.